Good morning.
Harlan, this must have been a really tough week for you.
Well, not really because look at your GoPro chart.
Okay?
It's just all over the place and just kind of sloppy. So, when you see this kind of slop, at least for me, I just kind of take a step back because I'm always all about patterns. And, if I see a pattern, I'm interested. And if I, don't see a pattern, I'm not. And, you look at GoPro and it's kind of all over the place.
Yeah, so you're not comfortable leaning on the support level at 74?
Not right here. Not right here. I mean, it's been a big moving name. So, it is consolidating. It is digesting that big move, but it's still kind of sloppy. If it were to come down and hit that the lows of end of October there, and that support level gets defended, then I might take a look at it.
Okay, well, the reason I was saying it was a tough week for you is because you usually come on Wednesday and you had to wait till Friday.
Yeah, I kind of thought you were getting that. You kind of threw off my week, but hey, all for the cause.
Okay, all right.
Well,
Boy,
what's tougher is it's 20 degrees here, unlike Arizona.
or Florida. Yeah, where Tim, you're in the Chicago area, right?
Milwaukee.
Milwaukee, that's right. A little bit
Milwaukee.
north of
Yeah,
there.
yeah. Northern Wisconsin, 3.5 feet of snow.
Oh my gosh. So what are you making of
Yeah.
just the general market, the spoos here? What a mundane week here. I don't even think we've had a little bit over a 20-point range here. A little bit of pause. I know you were a little bit cautious when we spoke to you last week. What are you making of this consolidation?
Well, you look at yesterday. Yesterday was really interesting because, you went from being, like the NASDAQ comp was up like 28 points, and the next thing you know, by the end, it went negative, and then it tried to stabilize and it finished the day up five. You know, After being up 28 points to finish up five, that's, borderline reversal. And a lot of stocks underneath the surface, they too were starting to show some, they just weren't buying the strength that was shown on the headline numbers. So, but Apple was a big driver yesterday, and the day before that. So, why not? So that's why you had the indexes up so much because Apple's 8% of the Nasdaq. Why do you need to overweight an index so much unless you kind of want to push it from time to time? So if you backed out Apple yesterday, this market wasn't as strong as the headline number looked. And then when you see a lot of growth names that just weren't getting the mojo, so to speak, like a name like Illumina, ILMN, that stock was, broke out of a base mid-October into a new high, ran up for a while, and then it started pulling back off its highs. And I'm like, this is what I like. It's right back at support. It broke to the upside of its pullback and instantly failed. So that was the best trade I did yesterday was by not doing Illumina.
Okay, all right.
So, well,
Well, that's sometimes
it is
that's a
what it
good
is.
strategy. Sometimes that if you wait, I mean, it's not a loser in the books, but it's something that you learn from. Have you been participating in this Baba rally?
No, I haven't. No, I can't say I have.
Not enough
It would
data.
have been nice. True. These new issues, they get hot for a while and then they kind of settle down. This was one of them. Much like GoPro when it originally broke out and took off to the races. But we've been seeing a lot of names will break out and they'll sputter. This one and GoPro were one of the few that would break out of a base into a new high, and they just took off like rockets. Right now I look at Baba and I'm going, all right, where's support? Where's decent support? And what if the market goes into a correction or, some sort of healthy pullback? I'm always looking, where's the gimme trade? Where's the major support? And it's right where it broke out at 100.
Okay, Harlan.
So it may take a while, but if you were on that ride, congratulations. You got yourself a nice little pop there. Don't forget to pay yourself in the process. No one said they had to get rid of all of it, but you got to lock your gains time to time.
What do you do in situations like the Halliburton and the Baker Hughes. Do you try and get involved in those, or do you prefer just to let the arbs and the rumors, battle it out and not participate? Or sometimes what Dennis and I will do, or look for sympathy plays.
I like the sympathy play talk, but with regards to like Baker Hughes, how much time did you really have? The moment they announced that, boy, you had to be right in front of your monitor and hitting that trade immediately because they just run so fast. We have a phrase that we use a lot. It's called "don't blink," and because if you blink, you miss a trade. Some of these things move that fast. Now, as far as sympathy plays, go through the group, or the energy patch, if you will. And if you looked at Baker Hughes' chart before this was all announced, you saw yourself, a stock that was just sitting there, just sitting right in the gutter, hitting, trying to retest the lows. And it was just kind of stabilizing, wasn't really going anywhere. And then all of a sudden, something came out. But I liked the pattern before that. Take a look at WLL.
Okay,
Same
that's
pattern.
that's a new one there for me. Okay, so just sitting in the trough, Whiting Petroleum Corporation, common stock here. I guess with this one, you're out, right, Harlan? Right? If
Yeah,
it takes
yeah,
out
yeah.
the low of
Well,
the move. Moving on,
but
we
it
got.
looks just like Baker Hughes
Yep.
before Baker Hughes popped. And then there's one more. I think it's Kodiak, KOG. So,
Okay.
me being a chart pattern guy, I'm always looking for the patterns. So, in regards to your sympathy plays statement, from a chart pattern perspective, KOG, WLL looked just like Baker Hughes just before they took off. So, for me, a chart pattern guy, that would fall right into that realm.
Okay, let's move on. We're getting some questions here about the solar sector here, and let's just first go to First Solar. I think last time we looked at it earlier in the week, I think maybe we called 50 support, but I hope we called it not support because it's well under 50 here. Made a low of the move yesterday at 47.13, closed at 47.56. Pretty ugly looking chart here, Harlan. Would you like to just pound this one here since it took out the low? Or, I mean, I know there's nothing on this chart that's going to tell you to buy it.
Absolutely not. I wouldn't be looking at adding to a short. If you were short going into earnings, congratulations. Don't overstay your welcome. But, the pattern was there, short sell pattern was there before earnings even came out. You see the stock got slammed in the September, October. And then what did it do? It did a snapback rally like we've been talking about for weeks, which is, a bear channel, and it broke to the downside. So, the pattern, the short sell pattern was there before this thing even broke. Now bring up CSIQ.
Okay.
You'll see the same dang thing. Hit a low, came right back up, put in a little double top there,
Ooh.
right up to the 50-day and fell apart.
Wow, that thing's lost 7 points in the last two trading sessions.
Yeah, and a $33 stock, that's pretty huge. Well, they did come out with earnings,
And they were good.
and
Well, they
yeah, and
liked
it
them.
popped right at the open and instantly, just instantly. But look at where that pop took it 2 days ago, right
Yeah.
up to a prior high.
Yep, I do
So
see
you
that.
knew that was resistance. But here too, if you looked at a really short-term chart, it was don't blink.
Do you think
It
that
fell
don't
that
blink? You
fast.
think that's just because the computers? The computers are so
Yep,
fast? Yep, the
I think
computers.
so. I think that has a lot to do with it. Climate is changing. Things are moving a lot faster than they ever have. So I think it's, one could say it's a new norm to be aware of because markets do change. And we've seen this more often than not. Just in the last couple of years, things have gotten really fast when a stock moves in both directions.
Okay, how
So
about
I think
this?
that has a lot to do with it.
How about this for a setup here? And I know we do have some Elon Musk fans here, but what do you think about this potential setup here in Solar City? I mean, looking at these other solars just kind of getting pounded. Now you got all these lows here. just above $50. Actually, 49.98's been the low of the move. Now this one's been hanging in here. Potential trade. Do you look to go short that going through $50, or is that just too much support for you?
Well, one could. I don't think it's a lot of support. It's like 4 or 5 days. I mean, I'm looking at those retests of the lows down there. What price is that? Around 46?
Yep, I believe that was the Ebola lows,
Yeah, yeah.
45.91. So that's yeah, that could be a good target.
That's support.
Yep, that
Right now,
supports.
that's support. But look at the pattern before this thing broke to the downside. It hit the October lows, did a snapback rally right up to the 50-day, and that was it. So, you see how these patterns are all starting to show up like this? When you see these stocks that are damaged, they hit a low, they do a snapback rally, and that's it.
Yep.
I think you could say there's another one, LAD maybe, Lithium Motors.
LAD? I don't think I've ever heard of
Little
that.
different animal than solar, but look at the pattern.
Ooh. Yeah, so
Look familiar?
yep, and that one looks like it had a gap fill there. Let me pull it up here. You'd had a gap
Well,
down.
what's nice is yesterday it retested the highs from at the end of October and turned tail. So resistance was those highs, and resistance was defended.
Harlan, I want to ask you about Twitter here. The it had the gap fill that we've been talking about. Got the nice boost off Analyst Day here, and then it just turned around on a dime. Junk rating for its debt definitely had its toll. Do you think this is just a chance to maybe come back and purchase this thing under $40 on the cheap and lean on the low of the move at 38.81?
Well, what happens if it breaks 38.81? Where's support? 36.
Okay.
But look at it. This isn't exactly a market-leading stock. I mean, you're catching a stock that's damaged goods. You're trying to go long a stock that's damaged goods. I mean, aside from a trade, on the long side, maybe if it hits 36, because that is support, but that's got to get defended too. It's just not a good-looking pattern. I mean, you had the Analyst Day, everybody, all the hoopla. It's like, wow, everything's great, and then what? It just failed. So that ought to tell you something too.
Right, and it's just interesting to see the gap fill, but really in the whole scheme of things, it was just snapback rally on the Analyst Day, and looks like it's coming back down. So, interesting viewpoint on that.
A chance to sell.
Okay, all right. One more shot has a good question here. What indicators do you use on your charts when searching? How many days do you go back to get the beginning of your research?
Typically, I'll hang out with a 6-month chart with a 50-day moving average, and then from there I'll just start drawing support, resistance. Look for Fibonacci retracements, things like that.
Pretty clean, huh,
But for me,
Harlan? Yep.
Yep.
Yep. Yeah.
Because I can tell you, I mean, you can sit there and draw charts up and edit charts like there's no tomorrow. But I do like to keep them as clean as possible.
Yep. Keep it simple, stupid. Do you have
That's right.
do you have any uh like programs or anything that help you, identify that? Have you been able to program any software to kind of be doing the scans for you based on your criteria? And I mean, I've tried to, build various indicators and trading systems and stuff. It can be difficult and it's expensive. Have you been able to automate any of your strategies?
No, I haven't done that on purpose. And the reason being is, back in the old days, before the internet, if you will, it's kind of like Ralph Ancampora. Remember when he was on, how he talked about, he grabs the books? That's exactly what I did. I would go grab daily graphs from William O'Neill and Company, and I would just, over the weekends on Sunday, because you get a special delivery, I would sit there and I'd spend a couple hours and I would look through page after page after page of charts. And the beauty was I got a really good in-depth look underneath the surface of the market where, and I was all I was doing was looking for patterns. And I would look through, I'd see the good stuff, the bad, and the ugly. I mean, it was really Clint Eastwood. So when you look at it from that, you get a really good feel for what's hot, what's not, what's, you have no clue what's going on. So, and that's how I build my list. And I still do that today. So, I try to see what's going on, and I just, I do it the old fashioned way. I want to look through, as many areas as I possibly can.
Okay, couple more issues for you coming out of the chat room. I believe it's Exact Sciences, EXAS. Exact Sciences Corporation. Harlan, what's your take? Buy, sell, or hold here at the $22 level. Oh, it's actually
Well, support's right at
23.11.
22.
Yeah. Go ahead. What's your take on this one?
I got nothing bad to say about it. I mean, support's at 22. Right now, one could say it's base building between 22 and, let's call it 25 and a half, 27. So as long as it holds support at 22 with the 50-day moving average at 21.68, there's nothing bad to say about it. It's in an over, and then look at the 6 month. Just line up your bottoms on the 6 month. This is a nice trend channeling stock. As long as it's in a clearly defined uptrend, defined by the last 6 months lining up the lows, I have nothing bad to say about it.
Okay, and what about Dan? DAN. Ooh, this one's looking a little, as Dennis would say, this one's looking a little itchy here on the up for an upside breakout, wouldn't you say?
Well, it did a fresh breakout, one could say, over that 20 and 3/4 level. But it's just kind of, overall, when you look at a 6 month, aside from that big spike up, which is, I'm assuming, an earnings pop, it's just been kind of chewing around up here. But overall, that's kind of along the lines of all those chart patterns that we were talking about earlier that are snapback rallies. And if it fails, it fails. So I think it just needs some time. If you can sit here and base build and the 50 days starts to curl up, you may have yourself a new base being built.
Okay. Before I let you go, I want, of course, your technical take on this, but I wonder if you could maybe put on your fundamental hat a little bit. And I've been looking at Google here, and this stock is just really hasn't rallied with the market. It's gone down since it split back in April. I don't follow it that much because it's, I'm always like, well, Goog, I always want to pull up Google and look at the combination of the stocks. First, let's talk about the Googster, GOOG technically, and then anything, can you make any comments on the fundamentals?
Well, not really so much the fundamentals because I'm a technician and, I'd rather pay attention to the action of what is for me, simply being a chartist. But, when I look at Google, I'm not seeing, all I see is a stock that got slammed. It snapped back right up to that 560 level on the GOOG. Which one are you looking at here?
Yeah, let's go with the Googster.
Okay.
GOOG.
Came right up to that resistance at the 560, and it's been pulling back off those highs. So we know 560 is resistance. Just draw a line right across there over the last 6 months. You'll see it. It's also the 50-day moving average, mind you. Stocks below the 50-day tend to stay below it. Stocks above that are in uptrends tend to stay above it. So looking at this, draw a line across, what's that sub 540 level? Let's call it 539. So that could be a little minor support. But what's nice is this is what I call a first thrust up. It did a thrust right off the October lows. And after you get that first thrust up, if it's going to go higher, they start to build a pullback off highs pattern, which is what we're seeing here. So if the 540-ish can hold and it starts to want to work its way higher, it's not going to be all that bad. Remember, this is a big index name. I think this name makes up 8% of the NASDAQ. It's a huge number. It's going to have an impact. It's a tape painting stock. So what I mean by that is if they really want to push this issue, they can mask a lot of damage being done underneath the indexes by just moving this name and say Apple and things like that. So you have to be aware of that. But I have nothing bad to say about it. It's pulling back. It's consolidating nice and tight off of the October highs. It just needs to find some stabilization. And the first part of stabilization is going to be at that just just below the
538.
540 level. So
Yep.
let's keep an eye on it.